Hello and welcome to the Mark Moss Show. We are talking about the decentralized revolution. Of course, we're talking about Bitcoin, cryptocurrencies. We're looking at through the lens of the world today. We're looking at politics, finance, technology, and seeing how it's all making sense. And when we look at the world through that lens, we can all agree that it is wild, never a dull moment, which is good for people like me who sit here and try to talk for hours and hours because it gives me plenty of stuff to talk about. There's a quote that I often use because every day I'm reminded of how real it is, and it's by somebody who I shouldn't be quoting, but Vladimir Lenin from Russian history, who was infamously, a bad ruler. Let's just leave it at that. But he said that there's decades where nothing seems to happen, and then there's days where decades seem to happen, and that's about where we're at. And in the financial markets, the Fed raising rates again this week. How high will they continue to raise rates? The markets are crashing. How far will they continue to crash? The cryptocurrencies markets are melting down. Will they disappear forever, or will they still be there in the future? Is now a time to buy the dip or not? I mean, there's just a never-ending amount of things to talk about. And so I appreciate that because it gives me lots of things to talk about. And you need to be paying attention more than ever before because we don't know what's going to happen. It's more uncertain than it's ever been. We have landmines. We have potential triggers all over the world. And if we start on a big macro scale and then get down into more of like what I would consider macro, which is like a micro now, if we start really big, I mean, we got 3 potential nuclear situations that we're dealing with between Russia, between Israel and Iran, and between Taiwan and China. 3. And they could all happen in the next like 6 to 9 months. It's like that close. So that's really big. We have the European Union about to break up with countries going bankrupt. We have Credit Suisse about to blow up, which could take Italy, Malta, Spain, Portugal, Italy, Greece with it. That's bad. Japan is about to have to start dumping U.S. treasuries or have its currency completely blow up, which would then pull the U.S. down. So hopefully I'm not depressing you too bad. But in that backdrop of that macro, of course, Bitcoin and cryptocurrencies are taking a hit as well, as U.S. stocks are. The NASDAQ is down. The S&P 500 is down. The S&P 500 is holding up pretty good because of one company. So the S&P 500 is weighted, and the biggest company in there, which is Apple, that makes up the biggest chunk of that weight, has been holding up pretty well. And because it's holding up pretty well, it's keeping that up with it. But don't let that fool you. Danger is there. And of course, like I said, the cryptocurrency space, which is way more volatile, including Bitcoin, is barely hanging on. And a lot of people have been asking me, where will Bitcoin go? Should I buy now? How far will it go down? The answer is we don't know. That's the answer. We don't know. What we can do is we could try to look at a bunch of different indicators and tools. We can look at history, and we can try to use it as our guide. So let's look at a little bit of history here. So what we can see is that throughout Bitcoin's life, over the last dozen or so years, it's been volatile. You know that. You know that already. You hear that all the time, right? It's volatile, it's volatile, volatile. So it goes up and down. Now, that's a good thing. It's a good thing. If it wasn't volatile, volatility works both ways, goes up and down. So how would it go from 0 to, what's it at now, 21,000-ish? How would it go from 0 to 21,000 if it wasn't volatile? And the answer is it wouldn't. It would just be at 0. And so it's a good thing. But if you're staring at it on a short-term basis, it could be dangerous. And so if we look at that, we can see that there's been some big crashes throughout its history. And as a matter of fact, I thought we'd look at some of the biggest ones in history. Now, the biggest one in Bitcoin's history doesn't really count. In my opinion, it's like an outlier. I want to kind of remove it, but that's in 2011. So Bitcoin had just got going, and it went from $2 all the way to $30. All right. And it basically was worth an ounce of silver, which was a pretty big deal for something brand new. All right. But at the time, there was no industry, right? There was no Coinbase. There was no places to get it. There was one exchange, and it was Mt. Gox. You might have heard of Mt. Gox before. It famously blew up. People lost a lot of money. It was the largest Bitcoin exchange in the world. And they admitted that criminals had hacked hundreds of accounts and stole millions of dollars worth of Bitcoins in a single day. And the value of Bitcoin fell to a penny. So that was pretty bad. That was a 99% drop down. But like I said, that's kind of like an outlier. Bitcoin had just got going. It was only worth $2. basically, millions of Bitcoins were stolen a single day. The only exchange there was crashed. Nobody knew what the heck it was, and the value fell. So that's kind of an outlier. If we put that one aside, okay, then let's go from there. So then in August 2012, we learned that there was a classic Ponzi scheme updated for the digital age that had been bilking crypto investors for months, promising incredible returns of 7% a week. And they had stolen over 700,000 Bitcoin at the time by deception. And that caused Bitcoin to crash by about 56%. That's pretty big, over half. The big one, there's two big ones, and these ones are more relative. April 2013, Bitcoin was a victim of its own success. Investors piled in. This is when it had first caught my eye. I saw Bitcoin going up, 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 up. This is the first time it caught my eye. I was like, maybe I should buy it. I see it going up. I think this could be a big thing. It was a new opportunity. Everyone was excited. It started to buzz in kind of like the not mainstream media, but kind of underground media. Trading was so intense that Mt. Gox couldn't handle the volume. And when it crashed, then hackers attacked the vulnerability and it forced Mt. Gox into an unprecedented total shutdown. Again, back to early days. One exchange, super fragile, no redundancy. Today, if one exchange goes down, no big deal. There's 50 more, right? But we can buy it on PayPal and Venmo, right? But back then, there was one. There was no redundancy. So when it went down, it sent prices from $260 all the way down to $50. That was an 83% drawdown. December 2013, China banned it. One of the 13 times that China has banned Bitcoin. And China banned Bitcoin at the end of 2013, and it lost 50% of its value overnight, according to The Guardian. Of course, like I said, it was one of 13 times they've done it. As a matter of fact, in 2021, they banned all Bitcoin mining. Bitcoin mining went to zero in China, and now it's back up to 20% of where it was before. So they just keep trying, but they can't stop it. Let that be a lesson. No nation can stop it. And so it dropped 50% of the time from there, 50% from the time. So we have, besides the original outlier, had barely got off the ground, we have a 56% when there was the big hack from the Ponzi scheme, 50% when China banned it, 83% when, again, Mt. Gox crashed and had this big hack because it was the only game in town. So you're starting to see a trend here, 83%. Then, more recent times, everybody remembers this. This one is the biggest crash that we've had to date in history. If we get rid of that first one, and this is December 2017. So this is when Bitcoin really came onto the scene. I started buying it in 2015, so I got the benefit of 2015. I think it was about $300 when I started. 2016, 2017. I think the year started out 2017 about $1,000. And by the end of that year, it had gone to 20,000. So that's a 20x return inside of 1 year, which is amazing. If you've ever been around investing, that is unbelievable returns. It was 19,000 and change. It broke every record. It peaked near 20,000. We also saw the legitimacy of Bitcoin because the futures exchange, CME, brought out futures, which then legitimized it. It started getting real mainstream press. But then a couple things happened. As a matter of fact, in my opinion, it was a full-on attack against Bitcoin. There was three powers that be that seemed to conspire and come against Bitcoin at the exact same time, and that caused it to crash. I'll tell you about those three things and how far it crashed and what we can learn from that as we look at the next two crashes. I said that there was three powers that be that conspired against it. So Bitcoin had gone in a bull run 2015, 16, and 17. It started January 2017 at 1,000. And by December, it was just under 20,000, 19,000 and change. Now, what happened is, come on, this is simple, right? Markets stop going up when there's no more buyers. Simple. Markets also stop going down when there's no more sellers. So as the prices were going up, it started sucking in more buyers. Everyone was like, oh, I'm getting rich. I bought it at 4,000. Now it's at 6,000. I bought it at 6,000. Now it's 8,000. And everybody wants to jump in. We, as humans, we're very simple. We rush towards pleasure and we run from pain. So everyone's getting rich. I want that pleasure. I'm buying. And so as it's going up, it starts sucking in more people. But eventually it starts running out of people to suck in. It kind of gets all the people people that kind of believe in this tech and they're willing to take some risk and they're investors, but it starts running out of people. But then the attack came. What's the attack? No, it's not the futures. What happened is simultaneously, the new buyers, remember market stopped going up and there's newer buyers, the new buyers were taken out of the system. How? What does that mean? Well, if you don't hear about it and you don't know about it, how would you buy it? And the answer is you wouldn't. And so we saw Facebook and Google simultaneously ban all advertising. So now you weren't allowed to talk about Bitcoin and cryptocurrency on Google or any of their properties, or Facebook or any of their properties. And so people were advertising and talking about it, and people were hearing about it and buying it. So there's new buyers coming in. But as soon as they took away the ability to talk about it and advertise it, then no more buyers. And then simultaneously, the banks also attacked it. And so then no banks would allow you to transfer money to a cryptocurrency institution. They wouldn't let you transfer money. They wouldn't let you buy it off of your credit card. And so then they made it where you couldn't put money in. So even if you heard about it, which you couldn't through Facebook or Google, but you heard about it through word of mouth, and then you tried to buy it on your own, then the banks blocked you. And it happened at the same time. So they took away the new buyers. And when you're going up at a certain trajectory, and you're sucking in all these what we call weak hands. So these are people that don't really understand what they're buying. If you know, if you've been outside the country and you've seen the problems that the financial system has caused, and you see how Bitcoin can solve that, you're a long-term holder, right? You understand the value proposition of Bitcoin. But if you only bought because somebody told you if you buy it today you can make 20% on it, then we call that a weak hand. You don't know what you bought. And so what happens is if we start running out of buyers, they take away the ability to talk about it and advertise and put money into it. Well, then it starts going down. As soon as it starts going down, all those people that bought at the top, the weak hands that didn't know what they were buying, they sell. Wait a minute. I was told I was going to get rich overnight. I was told I was going to make 1,000% of my money, and I didn't. And now I'm actually losing money. I don't like this. And they start selling. And so that's why markets get parabolic at the top, and they also crash really fast at the top. All those weak hands that came at the top that pushed it higher are the ones that sell at the top and push it back down. And that's exactly what happened. And Bitcoin ended up going down 84% from there. That was fun, living through that. Not really, but actually it led me to you. So when they when they stopped us from doing any advertising for Bitcoin and cryptocurrencies, then in 2018 I started a YouTube channel, and actually my business partner at the time had started a YouTube channel. I was doing videos with him, and then eventually, mid 2018, I started a YouTube channel, which has now led to me having a podcast and me being on the radio talking to you right now. So I guess it worked out for us at the end. But anyway, it got really boring going through that process. It dropped down 84%. Then we saw eventually hit the bottom and started climbing back up, and then there was another big crash, and this was March 2020. Of course, this is when the pandemic broke out. The pandemic broke out, and all the markets crashed. I mean, they shut down the entire economy, right? They took away people's businesses and livelihood, and the entire market crashed. And of course, Bitcoin crashed as well. And Bitcoin crashed 50%. Now, something to keep in mind here is that when the stock market started to crash, the S&P 500, the NASDAQ, et cetera, which of course they're crashing because they shut down the whole world economy, they use something called circuit breakers. I don't know if you've ever heard that before. Basically, what the circuit breakers are is it's part of the plunge protection team. I don't know if you've ever heard of that before. The PPP, plunge protection, or PPT, plunge protection team. And basically, it's a team that protects the markets from plunging too fast, if you can believe that. And so then they trigger these circuit breakers. So if the market's dropping too fast, it trips the circuit breaker and it basically stops all trading, is what happens. And so I think in March of 2020, I don't have it in front of me, but I believe it happened 7 times. 7 times they had to stop the stock markets from going down, and it still dropped 35%. Okay. Now Bitcoin didn't have any circuit breakers. There was no plunge protection team. Nobody was stopping it, and the story is that one of the big exchanges where you could go short on it with leverage, BitMEX at the time, it actually, some of the bots that were doing this automatic trading were stuck shorting it, and the system froze up, and they couldn't go in and close them. And I believe someone had to actually do a DDoS attack against BitMEX to take it down and get those bots from shorting it, which was pretty interesting. And so it had definitely had extreme circumstances, but if we ignore the circumstances, it dropped 50%, no plunge protection team, no circuit breakers. May of 2021, it dropped 53%. And that brings us to today. So here we are today, and we are down about 70% from the high as of right now. So how much further could it go? Well, the worst that we have in history, if we take out that original one from when it first started, then that means potentially we'd go back to the worst that we've ever seen. Would we go back down to 80%, 85%? That would push us down to about 10.5, maybe 11,000-ish if we went down that far. But I don't know if we will. We have a couple other indicators that can help us figure this out. I'm going to tell you about that in a minute, where the floor is on this, where maybe some good entries are and some things like that. I'll be back with that in a minute. So if we go back to 84% from the high today, as I was making the case, that puts us, I'm kind of looking at the chart, that puts us at approximately 84%, about 10,800. So I'm not saying it's going to go down there, but I'm saying that would be the worst ever, which is about another, 50, 60% drop from here, which isn't super fun. Now, we don't know if that's going to be the case. We have no crystal ball. Now, a better way to look at it is that there's something called a 200 moving average, 200 weekly moving average. And so what it does is it takes the price and it looks at it over a 4-year period, which is an interesting time frame because Bitcoin has a halving cycle. So every 4 years, the amount of new Bitcoin being produced every day gets cut in half. The supply cuts in half. So supply and demand. If the demand stays the same, the supply gets cut in half. What happens to the price? It goes up, right? And so the 200 weekly moving average moves along with that 4-year time frame. And when we zoom out and we look at Bitcoin, it's only gone through this 200 weekly moving average like twice, and just very, very briefly. So it looks like back here in like 2018, it just kind of barely dipped below it for maybe 2 candles. Then, of course, March of 2020, we just talked about that. It did dip below that. As a matter of fact, it went down about 30% below it, but only for just 1 week as it bounced back up pretty quickly. And here right now today, we're sitting right on that 200 weekly moving average. So historically speaking, it has been the best buying opportunity to buy in at that price. Now, we don't know if history repeats. As any financial advisor will tell you, and I'm certainly not one, but any financial advisor would tell you that past performance is no guarantee of future. So we don't know that. But like I said, it's been what some people call a generational buying opportunity. I think it's a little bit too much hype for me to use, but it's traditionally been a very good point. Now, records are meant to be broken. So could it drop below that? It certainly can, but it looks like it has massive amounts of interest there. Whenever it gets down to that level, people are just buying it up like crazy. And so that's what we're seeing. But at the same time, we've never seen Bitcoin in this current market environment that we're in today. And so what do I mean by that? Well, Bitcoin has only been around since 2009. And since 2009, we've been in a long-term secular bull market. That means the markets have just been going up since 2009. Now, there has been some dips, don't get me wrong, but those are called cyclical dips. So those are short-term dips inside of a long uptrend market. And so Bitcoin's only been around for that. Now, we don't know, but it looks like there's a good probability that we could be going into a long-term secular downtrend market. And we don't know how Bitcoin will respond in that. And so we don't know. And so trying to use this as history, it doesn't guarantee anything. It definitely doesn't guarantee anything at all. But like I said, it's sitting at that support, which has historically been a pretty good place to buy. So anyway, the other cryptocurrencies, they're kind of following that. Now, most of the big Big name ones are down even worse than that, if you can believe it. It looks like Ethereum is sitting right on that weekly 200 moving average as well. So, we'll see what happens here. It's been a good day for the stocks. We saw that pretty much the entire stock market, the ones at least I'm looking at, are in the green, meaning they're up. And it's weird because they rallied off of the Fed's announcement. So the Fed came out and announced today that they are raising rates by a whole whopping 0.75%. It's not so much how big the raise was. It's more about the percentage gain of that raise. And what's interesting is that they're doing this to try to calm the markets, to pretend like they have some control over that, which of course they don't. And it looks like they're losing control because of the way the market responded to it. And so it was interesting when they raised rates, which they're supposed to, or they're hoping to crush the market or crash the market because of that, it actually responded the other way. And actually what happened is the markets went up. We saw gold go up. We saw Bitcoin go up. We saw stocks go up. We saw the dollar index go down, which is very interesting. And it almost means that the market doesn't believe that the Fed has control. And that's exactly what I'm seeing here. Love to hear what you think. If you're not following me on Twitter or on social media at all, you can find me on Instagram and on Twitter at the #1 Mark Moss. That's just the #1 numeral, the numeral 1, not spelled out. But hit me up on there. Let me know what you think. I'd love to hear what you have to say about that. But it's interesting. If we look at this, they're trying to tackle inflation, supposedly. I say supposedly. They are. And that's because inflation continues to run hot. Now, I talk about this all the time, so I'm sorry, but it's not the definition of inflation that I typically go with or what the Austrian economists would think of inflation, but they're talking about prices going up. And so prices are going up at the highest rate we've seen in 40 years, which goes back to the 80s. Now, it's interesting if you break that down because we have inflation, CPI, consumer price inflation, came out at 8.6. So we haven't seen that high of CPI since the 80s. Now, it's interesting, though, because in the 80s, we measured CPI completely differently. So the way CPI is supposed to work is that you measure, if I went to the grocery store and bought a basket of goods and I had steak and milk and cheese, and then every single year you measure that T-bone and the pound of meat, it's T-bone and cheese and milk. And every year I went back to the store and I bought the exact same thing, and you measure the price over time. But what they do is they change the basket. So they continue to change the basket to manipulate that number lower. There's a company called Shadow Stats that tracks it like they started out tracking it. Now, their number comes out at over 17% inflation. So they say it's the highest we've been in 40 years, but that's with their manipulated down number. The reality is that we are more than double where we were 40 years ago, which is pretty interesting. I think it's pretty easy to see. All we see and hear is the talk of inflation, inflation, inflation. In my limited amount of market research, let me know if I'm wrong, but in my limited amount of market research, talking to my parents and some other old people that were around and remember back then, they don't remember it being as big of a deal as it is today. And so at that time, Paul Volcker, he was the Fed chair, he decided to get crazy, and he was going to raise interest rates so high that he was going to get in front of it, and he did. He took interest rates from 10% to 20%, if you can imagine that, inside of about 3 years, I believe it was. So that's a 100% increase within a couple years. But the Fed, they've done more. Now, I get it's only 0.25, but it's the percentage of change. And we're looking at about a 150% increase in months as opposed to a 100% increase in years. Now, imagine if your borrowing costs shot up by 100%, 150% in months. And that's where we're at. It's the percentage that matters. And what's interesting, I call this the decentralized revolution. So I talk about the world is like on a pendulum, and it swings back and forth on a 250-year time frame, and it swings towards centralization, globalization, and then it pushes back and swings to decentralization. 250 years ago, the American Revolution pushed back on the centralization of the monarchy and set up a decentralized government. Of course, the United States was a republic. 250 years before that was the Protestant Reformation, which saw the pushback on the church and state. And here we are again pushing back on the centralization that we can see from the World Economic Forum and Health Organization and on and on and on. But it's changing a lot of things. And kind of like software changed everything. The software ate the world, they say, right? And it changed the way that we consume content. It changed the way that we communicate. It wiped out books and music and movies and so much more. And now we're seeing Bitcoin and this decentralized technology doing the same thing. And it's pretty amazing to sit back and watch. And it's happening so fast that it's starting to make governments look incompetent and irrelevant. And the more they try to fight this, I think the more incompetent and the more irrelevant they look. Now, you may think this is a bad thing. I particularly think it's a good thing. And so let's take a look at that. So some of the things that I'm looking at. So obviously with Bitcoin, that's an easy one. We'll talk about that for a second, then I'm going to talk about another one. But obviously with Bitcoin, cryptocurrencies, we have now used software to have a way that we could store value. All right, think bigger than just money and dollars. We now have a software, cryptographic software, that allows us to store value in a way that can't be stolen. And if I want to transmit it to somebody, nobody can stop it, block it, or prevent it. And it's code. And now we've seen over in the EU, they're trying to pass bills that say you can't self-custody your own Bitcoin or cryptocurrency. In the United States, people are talking about it. We haven't gotten to the point where they're really trying to do that. But think about this. It's cryptography. It's code. Code is ones and zeros. It's code. Now, the United States tried to outlaw cryptography at one point. It went to the Supreme Court, and the Supreme Court said, no, you can't outlaw this. It's protected under free speech because, look, it's code. They printed it out. It was on paper. How can you ban free speech? You can't. And so it's already been upheld by the Supreme Court, but of course in other nations they could do it, and maybe, who knows, the United States, they're trying to get around the Constitution every chance they get these days. But think about this, with Bitcoin or cryptocurrency, I can store my value cryptographically, and all I have to know is 12 words in my head. I could store $1, $1,000, $1,000,000, $1 billion, however much I had, and I don't need any device, I don't need any piece of paper. All I need to know is 12 words in my head for the code for that cryptographic key. So is the government going to make it illegal for me to memorize 12 words? I mean, think about the insanity of that. They're going to make it illegal. So now, oh, nope, you can't know those 12. You can know other things. You can remember other things, but you can't know those words. Like, how does that work? I mean, the insanity of it. And so when you start to see governments trying to pass laws that say you can't know certain words in your head, they start to look irrelevant and incompetent. Now, you may think that's a bad thing. Maybe if you're a statist and you think the government should have complete control over us. I'm a freedom maximalist. I believe in freedom. I believe that everything in life has a trade-off, a cost-benefit. All right? And so tools can be used for good and bad. Look, tools can be used for good and bad, and they do. Baseball bats. They're used for lots of good. Lots of kids have fun. I mean, pro sports, playing baseball. And sometimes they're used as a weapon and they really hurt people. Does that mean we should ban all baseball bats? Of course, the answer is no. And so we could look at the money. Should we make it where no one's allowed to hold their own wealth in a way that the government can't steal it from them? Now, granted, okay, I mean, some terrorists, I guess, could use money to do terrorist things, but should nobody be allowed to hold money where the government can't steal it because maybe potentially a couple terrorists might use it? In my opinion, of course, the answer is no. Terrorists don't just use money to do bad things. They also use cars to drive around. They also use phones to communicate. I bet they even eat food and drink water. Should we ban all those things too? And of course, that's ridiculous because, of course, no, we're not going to ban food and water. Why? Because the benefit of food and water is so much greater than the risk. And so we have to look at things like that. And so I think that people should be free to do what they want. Now we have something else. Now we see in the United States there's an attack on guns, but that's also been digitized. And so now we have 3D printed guns. And with these 3D printed guns now, it's code. I can know the code in my head. They want to ban me having access to that, but I can just memorize it and I could just give it to somebody else. And now we have a 3D printer that can print those. And there's an article that just came out, was pretty interesting, that a YouTuber 3D prints the world's first rocket launcher. Wow. 3D printing has revolutionized gun making, has come a long way since the single-shot Liberator pistol was available for download in 2013. Now entire semi-automatic pistol carbines can be entirely printed at home. And now it's graduated to rocket launchers. That's pretty amazing. Now, rocket launchers could be used for good and bad, I suppose. I guess it's kind of dangerous. You wouldn't want those to end up in the wrong people's hands. But how do they stop it? And this is only going to continue, and this is the point. And it's just interesting. And I don't know where I stand on this. I certainly wouldn't want a bunch of guys just having rocket launchers if they wanted to use those for bad. But I suppose those same bad people could just get a car and drive it through a crowd. And those same bad people could go to the hardware store and get all the pieces they need to create, a massive explosive. So I suppose if somebody wanted to inflict pain, there's lots of ways they could do it. And they can't really stop it anyway. Again, I'm not here to really take sides on this, but I think it's interesting. I am taking sides on the money. When the government tells you that you shouldn't do drugs, it doesn't make you want to do drugs. But when the government tells you that you don't have the right to store your wealth in a way that we can't steal from you, it makes me want to do that. Just like in the United States, every time they start talking about banning guns, gun sales go up. And so I think it's interesting. I think the more they try to squash it, the more, like I said, irrelevant they look. Look at what they've done with the war on drugs. For the last 40 years, now 50 years now, they've been trying to fight this war on drugs. Trillions of dollars have been spent trying to fight this war on drugs. And drugs have to be grown and cultivated, and they have to be processed and packaged, and they have to be shipped, and they have to be smuggled, and they have to be distributed, and all these things. And they can't even stop that. They can't even stop them from going into a prison. How the heck are they going to stop Bitcoin that's completely digital and anonymous and transparent? The answer is they can't, and they won't. And I believe they don't even want to. And I've covered that before. You can go back into my, the podcast and you can look. I spent a couple of weeks on the podcast going through every single talking point of why Bitcoin won't work. They're going to make it illegal. They want to make it illegal. They're going to crash it, on and on and on. And I answered those. So go check out the podcast if you want to know all my reasons for why that won't happen. And of course, I'm a believer in Bitcoin, but one of the things I love about Bitcoin is it solved the oldest problem in history. The oldest problem since man was first on the earth is, how do I store my property in a way that can't be stolen? That's it. So we made a tribe, and we made a village, and we made a kingdom, and we made a country to protect our private property. But now I can remember 12 words in my head. And so I believe it's the most revolutionary thing we've ever seen. And because of that, it's gone from zero to, it's low today, in the mid-20s today. Since you've stayed to the end, I know you like this video, which means you're probably going to really like this video right here and this video right here.